Good afternoon, traders, and welcome to the Hot Stocks Outlook for July 8th, 2016. Now, this week, coming off the Brexit vote, has been an exciting week throughout the equity markets. A lot of markets are moving dramatically higher, and there's been a great opportunity for profit potential. But what I really want to demonstrate is how we can anticipate these moves, really get into the markets before a lot of the volatility picks up, and really demonstrate some of these fantastic opportunities in the market here. So just looking at this chart to start out here for Taser Corporation, symbol TASR, we actually had a forecast to the upside telling us to go ahead and get long around $19, $20 a share. And since that time, the market has rocketed higher since that forecast to the upside, about 33, 34% move to the upside. But what I'd like to do is really explain these indicators, how they work, and how you can really anticipate these sorts of moves so that rather than, trading inside of all that volatility, trying to chase markets and react to markets, you can really anticipate these trends, take your positions really with a process in place to help you be more successful and capture that volatility to really put it in your favor. So here we have, you see Taser stock, and we actually have a few indicators here on the chart. And what's great about this, all these indicators are very straightforward, easy to use, but let me go ahead and explain some of this. Now, this black line that you see on the chart there, that there is a regular moving average or a simple moving average simply takes the previous close prices, averages them together, and plots that line. So it's really a reactive indicator. It's always just reacting to the new daily close price, and it's always going to lag behind where the market has already been. Now, this blue line, however, that you see on the chart, that is actually VantagePoint's proprietary predicted moving average. VantagePoint, a software that utilizes artificial intelligence to forecast short-term price movements. And this is what can really help us anticipate these moves, get into these positions early, like I mentioned. So that blue line there is a predicted moving average that's actually generated via a neural network process. So analyzing huge amounts of data, finding important market relationships, and then forecasting, again, those short-term price movements, whether the overall direction and also short-term strength or weakness. But what I want to demonstrate here is if we go into our market tree, enter in the symbol Taser, we can actually find this stock, right-click on it, open up our Properties tab, and view what's called the Intermarket. So these are the markets that technology has found to have a statistically significant relationship here, whether that be a positive or negative correlation, a lead or lag, but it's looking at those 25 to 30 most closely related markets that are known to affect and drive Taser specifically in this example. So what you're going to see here is you've got ETF groups like the Growth and Value Index. You've got things like the Crude Oil Dollar Index, the S&P 500. But what you're also going to have are things like these competing stocks and competing companies, U.S. stocks, technology stocks, financial stocks. So a lot of these relationships very subtle, but vitally important to being able to anticipate short-term prices, get you much better entries, and really recognize that overall market direction with a really clear signal here. So what this does is it actually generates the value of this blue line and the black, and well, not the black line, but that blue line there, that predicted moving average. So whenever we get a situation where that blue line crosses above or below the black line, we know we have a trend change. We know we want to pay attention to that market because there's really a fresh opportunity there, a fresh trend change. And it really works exceptionally well. You'll also notice that during times of volatility and consolidation in the market, you never get a crossover. And that's how this neural network process can really help keep you on the right side of the market to make sure that you catch, some of the best parts of this move. I mean, it actually came, after that sideways a period of time trading where the market shoots up from about 23 to 25 in real short order, about 12, 13% after, really that sideways action where a lot of traders probably went ahead and sacrificed their position. Now, the predicted moving averages are very straightforward, give you that directional bias of how you should be trading the market, but you'll also notice this indicator at the bottom, which is actually called the predicted neural index here. And this is an extremely accurate 2-day indicator. So 2 days, 2 trading candles here, looking ahead and letting you know if there's that short-term strength or weakness in the market. And so what we're going to notice here is this indicator holds up extremely well. So when we got the crossover, our neural index was bullish, giving us that confirmation that says, yeah, There's a real trend here. You want to go ahead and look to trade this opportunity. Now, we got a little bit of short-term weakness in the market. You see our neural index drops down, but when you have this much separation between that prediction and the actual moving average, that's telling you, look, the overall direction is still up. Anticipate that short-term weakness, but you want to remain in a long position. Additionally, we see these lines pinched together very, very closely here. Our short-term forecasts telling us weakness over the next couple of trading days, but you see we start to get that separation again. Neural index very bullish, saying now go ahead, look to get long over these next couple day periods, look to take those long positions and ride that market higher. So phenomenal move in Taser, about a 35% move from that forecast to the upside, and just one of many really great opportunities in the market right now. But again, you really wanted to get into this market all the way back in May and ride out this really tremendous trend, not really be messing around with it when it's really volatile. Here, you want to already have that position in place, and that's really what I want to stress. With the VantagePoint software can really help you do identify these markets, but then trade them effectively moving forward. Now, here's another opportunity here in Gap, a retail stock, and same thing. The approach is very, very simple, very straightforward. Very simple for traders to use because it is very accurate. So we don't need 5, 6, 7 different indicators. It holds up really well here. So you see Gap stock went into a huge decline. You see we forecasted the market to move lower all the way back in March, and you definitely did not want to be holding any long positions. A tremendous opportunity to go ahead and buy some put contracts, maybe go ahead and sell the shares short, but about a 39% decline in Gap stores. But what you're going to notice is that recently there was a trend reversal here in the market. I'll actually go ahead and zoom in on the last couple of months on the chart here. But same thing as our last example there in Taser. We got this indication that the trend had changed. A lot of sideways action, not much movement going on here, but you got that crossover to the upside. And so once this neural index gets bullish, you see all this strength coming into the market and this trend really taking off. So what we're going to notice here is after that crossover, after that forecast to the upside, markets moved up here pretty considerably and is still trending higher. A lot of strength recently from the neural index here over the last week entirely has been moved up to the one forecasting the short-term prices to continue higher. So about a 20% move higher, $3.68 per share, but becoming a buyer down there at $18 a share and really avoiding all that mess from the previous months where the market declined almost 40%. That's really the benefit of having these tools that can analyze those global market relationship, look at what's going on in the retail ETFs and other competing stocks, the dollar index, crude oil prices, interest rates, and give you that forecast so that you can make a good trading decision as far as where you're going to make those buy, sell, and hold decisions inside of the marketplace. So we'll go ahead and move on to the next chart here, and Humana Corporation. And I have a lot of volatility here in the market, and this is why this is so critical. A lot of people probably were just not expecting this big of a move in Humana stock, and really probably a lot of people got hurt by it. But traders using this approach and analyzing these global intermarket relationships have a very clear forecast to make their trading decisions. So it became very evident back here in May here that you wanted to go ahead and get long at the end of May. We'd gotten a nice rally higher. You see a big green candle there, a lot of strength from the neural index as well over this time period here, signaling, look, you want to go ahead, maintain that long position on Humana Corporation. We see got a nice push higher, but things certainly have changed here and just a huge decline in the overall share price. So you see VantagePoint forecasting that the market's going to start moving down. No reason on earth to be long this market up here in the 180s. Neural index very weak with that crossover, saying look to go ahead and take short positions in the market, possibly buy some put options, do whatever you need to do, but a clear forecast saying this is not where you want to be holding out on positions, but a 12% decline just in the last 9 trading days. I mean, most of that really just yesterday, but you see the huge separation between this predicted moving average and the actual moving average, and additionally the short-term weakness in the market forecasting that couple days moving forward. You want to be a seller, remain on the short side, no reason to go ahead and get long there. Last opportunity we'll take a look at, and this is what's really phenomenal about these indicators and this approach is, even on these, utility stocks and even these high dividend payers, they have have some tremendous moves, tremendous profit potential, but you got to have your timing right. You have to clearly define that direction. So you see, we went into a little bit of a downtrend. Short-term prices were moving lower. The trend was to the downside, but look how quickly the software adapts and really maintains that position. Additionally, we get, okay, a crossover to the upside, neural index up at a 1, but look at all this strength over the neural index over that 48-hour period saying, look, the direction is up, look to be a buyer. So whether you're a day trader, a short-term trader, regardless of what it is, you can really benefit from the software indicating where that short-term strength or weakness in the market is, but also clearly determining that direction of the market, knowing that down here at $50 a share, look guys, it's time to go ahead, look to take long positions on Verizon stock. And this has been a tremendous opportunity to get involved with a really great company, really great stock, about a 10% move higher just in the past 27 trading days. So, you know, the markets there's a lot of volatility coming into the equity marketplace. There's a lot of phenomenal opportunities here to the upside, to the downside. Markets are moving all over, but you really got to have the analytics and forecasting ability to really help you make those intelligent trading decisions in the market. So that's what VantagePoint does for it. It's a huge help and really helps you minimize the downside risk, control your risks in the market, and really capture these phenomenal opportunities and not get out of the market at the wrong time. So as always, thank you all for watching. Again, this has been the Hot Stocks Outlook for July 8th, 2016. Again, thanks for watching and bye for now.